You are listening to Charting Wealth, the podcast from Monday, the 26th of September, 2016. Let's jump right in. Thank you for the 10 minutes. We will keep this broadcast under that. What do we have going on? Total Market, IYY, is an exchange-traded fund that represents everything going on in the stock market. What do we see happening? Well, we have a two-day candle, a big green up two-day candle. We have that preceded by another smaller green up two-day candle, and then preceded by two other green candles, one a green solid box and the other a spinning top. What we saw happened around Wednesday is the market soared after we had the Federal Reserve Open Market Committee give their report and basically say that they were not going to be increasing the interest rate in the near future. And the market took off. Did it take off enough to rotate our two-day MACD over going up? No, it did not. Even over that 4-day period, it wasn't enough movement to do that. We are still technically in a down move in the total market, and the derivative oscillator is also negative. If we look at the 4-hour chart, go from the 2-day to the 4-hour, we can see a little more about what's really going on. The market had slid sideways throughout the week, anticipating that meeting on Wednesday. When that meeting occurred, the market popped over that afternoon and the following day, which was Thursday, and then the market settled out and actually went down on Friday. Have we peaked? Are we going to have a rotation over going down? We don't know. That has not happened at this point. We shall continue to watch the market and see just what we see, but we haven't had that happen yet. We are actually for the day down 0.46%. If we do have the MACD crossover on the 4-hour chart going down to parallel the already down movement in the 2-day chart and the prior down movement in the weekly chart, we will be getting into that action on an inverse fund, making money as the market goes down, because inverse funds do what? They go up when the underlying asset or equity goes down. Now let's keep moving through these charts. We're now going to go to the S&P 500, down even more than the total market. The S&P 500, as represented by SPY, was actually down for the day 0.55%. We drove up candles over the last 2 days on our Heiken Ashi type candlesticks. If you haven't listened to our training on Heiken Ashi candlesticks, you need to. You can find it at our Charting Wealth site at YouTube. You can also find it at chartingwealth.com. You can also find it on iTunes. Now, let's continue to look intraday at what occurred. Again, still in a confirmed down move intraday, just like we saw in the total market. Over the last 6 days, well, the prior 4 days before Friday, we had up movement Wednesday and lots of up movement on Thursday, but that paired off actually throughout the course of the day on Friday. So again, if we see the S&P 500 crossover going down, then of course we want to jump in and get that down movement. We're going to be paying close attention as to how the market moves on Monday. Go back to our 2-day chart. Then we're going to go to the Qs. It was down the most for the day, 0.65%. Now the Qs is still in a confirmed up move on the weekly chart. It isn't a confirmed down move on the 2-day chart, but it has been moving up solidly for the last 2 days, Thursday and Friday, the last 8 days, all the way from last Friday, Thursday and Friday, and through this week, we have had it just pushing up. Each of our candles represents movement over 2 days, although it hasn't been strong enough to actually rotate over the MACD. We are still closed well above the Bollinger Band. So that movement reflected on this last 2-day candle from Thursday and Friday is massive. Now let's look at what occurred intraday. You can see that that massive movement actually was all in Thursday. It pushed up Thursday morning and then hit about the same mark Thursday afternoon. So all that movement was encompassed primarily in that big push up Thursday. Then we saw it petering down with some spinning tops, particularly on Friday afternoon as the market blew off steam and there was most likely some profit taking. Again, the Qs was down 0.65%. Now again, if you see the Qs rotate over going down, be aware that we're still in a confirmed down move on the 2-day chart. So if the 4-hour chart rotates over, you might have a good entry point. But with the Qs, be aware that the biggest chart, that is the weekly chart, is still in a confirmed up move. So let's continue to watch and see how the market progresses as the week begins and rolls along. Now, lastly, we're going to go to gold, which was up 0.07%. Gold is getting close to crossing over, going up on the 2-day chart. Hasn't happened yet, although the derivative oscillator has gone into the positive after just two 2-day candles of up movement, after a nice solid trend line going down that has been broken. But again, not a confirmed up move in gold yet, but that could be on the way. Let's look intraday with gold. Gold crossed over going up on the 4-hour chart back on the morning of the 21st and rocketed up for 4 candles. Then over the course of the day on Friday, we had an open red down and then a spinning top. Again, gold up just a little bit at 0.07%. Continue to watch gold. Is it going to rotate back over, heading down on the 4-hour chart? It is in a confirmed up move on that 4-hour chart, and on the 2-day chart might be getting close to a crossover. If it, however, moves back over on that 4-hour chart, you might consider jumping in and riding it down. We have been trying to use our 4-hour chart, however, with gold as a complete chart, and it has been working pretty darn well for us. Those of you who jumped in after that morning of up movement, or even the afternoon, what have you seen? Well, you saw another 2 good up candles, but pay close attention as gold started losing some of that steam. And remember where gold is on the weekly and the 2-day chart. Remember, all things being equal, the market tends to move in the direction of the biggest chart, and our biggest chart is the weekly chart. And guess what we're about to do? As soon as we finish this broadcast, we'll start uploading it, and we will record the weekly review and forecast. Please make sure you listen to that also. If you want to help us out, go to iTunes, give us a 5-star rating, say something nice about us. We want to be number 1 when you put in searches for stock market. You've gotten us up as high as number 6, and we so appreciate it. Also, go to our YouTube channel and subscribe. YouTube channel. Subscribe under Charting Wealth. Hey, we really appreciate you. We love to hear from you. You have questions, problems, concerns, go to our website, chartingwealth.com. Sign up for the newsletter. With that, you will get our Charting Wealth layout free from freestockcharts.com, along with our daily market worksheet, along with our How to Read a Stock Chart video. Thank you so much. God bless. Let us hear from you at chartingwealth.com.